Hi everyone, welcome to FOREX Trading Empire YouTube channel. In this video, I'll be going through the 9am CRT model series. This is episode 2 of the series where I'll be doing more reviews on the recent price data to show you more example in case you decide to make this your own personal trading model. Before I start, make sure to like and subscribe to the YouTube channel. If you're interested to join the FOREX Trading Empire community to have access to all the models in which we use in the community, the link is linked in the description below. You join the Telegram channel and you DM the admin to get you started and to know everything you need for you to get started in the FOREX Trading Empire community. So this is Euro US dollar, the 4-hour chart. In this series, I'll be using the Euro US dollar for the series where I'll be doing more examples on the 9am CRT model. So this is the recent price model. You can see this is Friday's candles. This is Friday price movement. So looking at this chart, you can see clearly that the 9am candle, which is this candle is the 9am candle. Looking at this price movement before the 9am, first you need to read the premium and discount array. What have price done in order for you to see if the CRT model before the 9am candle is indicating the same direction to the CRT. First, we saw price run out the sell side liquidity. After the run on the sell side liquidity, price traded through this fair value gap. A trade through this fair value gap and creating an inverse fair value gap during the process of trading through the fair value gap gives you a confirmation that price might likely retrace into the fair value gap, making it an inverse fair value gap. Making it an inverse fair value gap, if we're expecting higher prices to the upside. Seeing that during price movement inside the fair value gap, there's a CRT pattern where the 5am candle run out the 1am 4-hour candle. After the run on the 1am 4-hour candle, the 5am 4-hour candle traded into the range, closed inside the range. That's a clear indication of a CRT reversal from a sell side delivery to a buy side delivery. And in this example, we are expecting higher prices due to the fact that price traded through this fair value gap, made it an inverse fair value gap, and we want price to respect the fair value gap. We're kind of expecting price to respect the fair value gap if price were to go higher. Seeing a CRT confirmation inside the fair value gap gives you a clear indication, and getting to the 9am CRT model, to the 9am 4-hour candle, this is like an extra confirmation, which you can see by the power of hindsight, price traded higher, run out the buy side liquidity. So your bias is going to be looking for a lower time frame, a 15-minute run on sell side liquidity, then expecting higher prices. And your target is going to be the CRT high. Then you might decide to aim for higher target if you were to trail your stop. I will advise at the early stage, if you are thinking of using this model, you take your target at the CRT high at first. Then you might decide to scale in more profits due to experience. So we are going to go to the 15 minutes and I will show you the run on sell side liquidity, which you can see clearly from the 9am candle. The price took out the previous 5am candles low before traded higher. So seeing the price run out that low, trading higher, it tells you that there's a power of three where there's an opening price, run, which is the manipulation, run on sell side liquidity because we're expecting higher prices, then higher prices, then the full distribution after the run on the liquidity. So let's go to the 15 minutes. In the 15 minutes, you can see the opening price. The blue line is indicating the 9am 4-hour candle opening price. After the opening price, you can see a price traded lower, taking out the sell side liquidity. We are expecting higher prices and we want price to manipulate an opposite side liquidity. Either go for a fair value gap or go for a sell side liquidity. Price went for a sell side liquidity, which we're anticipating higher prices. So you go to the 1 minute time frame, 2 minute time frame, to look for your entry after the run on the sell side liquidity on lower time frame. You're going into the lower time frame to look for a shift of structure. After you identify the shift of structure, then you place your entry. You are aiming for your first target as the CRT high. The CRT high will be your first target, where you are using as your main target. If this is your first time trading this model, then with due experience, then you aim for higher targets. The first target is aiming for the CRT high. When you find a shift of structure, a clear shift of structure from the 2 minutes and the 1 minute. In this example, I found the shift of structure on the 1 minute. So I'm going to go down to the 1 minute, showing you how I got into the market from the shift of structure after the run on the sell side liquidity. As soon as the 9 a.m. candle opening, price traded lower, took out the sell side liquidity. You can see after the run on the sell side liquidity, you can see the impulsive move. Now let's move down to the 1 minute time frame. On the 1 minute time frame, you can see how price traded lower, taking out the sell side liquidity, which I explained we'll be looking for a shift of structure after the run on the sell side liquidity. So the first move after the run on the sell side liquidity, price did a retracement but did not shift structure, running out this high, which we are still not looking for an entry. Price traded lower, created a new swing low, created a new swing high, a swing low, a swing high. Then you can see how price traded lower, running out this low. As soon as price took out this low, you can see how price created a new swing high, running out this previous swing high. That was when price did the shift of structure from a sell side to a buy side delivery. As soon as price took out the high, price have shift structure from a sell side to a buy side. Then you are looking for a retracement to either a fair value gap or an order block, which in this example is the order block. You can see how price retraced down to the order block. After the retracement to the order block, then you can see the impulsive move. Where are you targeting? The CRT high, which is this line. So you close partials as soon as price get to significant swing highs on the 15 minutes or on the 5 minutes, so that you can manage your trade during the trade management. But your main target is going to be the CRT high. After you run on the sell side liquidity, you look for a shift of structure. Where are you aiming for? The CRT high. After you identify the shift of structure and set a limit order, or you can either use a market execution as soon as price trade into either the fair value gap or the order block. Then you aim for the CRT high. So that's all for this episode. See you guys in the next episode.